Hey guys, this is Mark Shawson, the Pattern Trader. Dr. Sean B was gracious enough to leave this review on our website, so I just thought I'd read it aloud to you. Dr. Sean says, Mark Shawson is an expert in technical analysis and he makes good money for his clients, including me. He is a man with great integrity and someone I trust implicitly. I am in his elite club where you achieve a lifetime membership and more frequent updates on the Forex and other market conditions. He's my good friend and I trust him as all his trades have made money for me. So Dr. Sean, thank you for your kind comments. Thank you for including me as a friend. That means a lot to me. And Dr. Sean is in my Friday Master Pattern Trader, so I see his voice each Friday. So thank you again for that. So in today's theme, I really wanted to talk to you about this little benign guy called an inside day bar. It can also be an inside week bar. These things look very benign. They look very innocent, but they can be catalysts for big moves, either continuation or reversal. What do I mean by an inside day bar? It's exactly what it sounds like. Literally the range of whatever the session you're looking at, daily or weekly, sits within the range of the prior session. So the high and low of the daily range or the weekly range sits within the high and low of the prior day or week. And it's a benign, innocent looking thing. I'm going to show you on the chart what I'm looking at in just a moment. But again, it can be a catalyst for a big move, because what the inside day bar says to me is that the movement has stopped and it's starting to compress, it's starting to coil. And in the case of a reversal, it indicates that a market that just can't make any more forward momentum. I'm going to flash quickly a chart of the Dow Jones Industrials back in January, where there was a collection of inside day bars. There was 12 bars right at the top of a huge move in the Dow Jones, right at the 29,800 area. And it was coinciding with a double top. So you can see that there's a peak pretty close to the peak on the Dow Jones chart. And then you just see where the market cannot make any more forward progress. And it had, I think, 12 inside bars, or very small, narrow range bars. Couldn't make any forward progress, and it just started coiling at the top. And to me, I'm always alert that these can be reversals, especially when it coincides with a pattern. So if you think about it, picking a top or a bottom of a market, is a very scary thing. It's not something that, I suggest you do frequently. And for me, when I do, see this turn, it's a collection of things. It's a pattern and it's a price action. When we see the Dow Jones, we see that it was, peaking right at the same area that it had a prior peak. And then it was going sideways, couldn't make any more forward momentum. And sometimes you try these things and, some work, some don't. But you can see the risk reward is phenomenal. That if you sell underneath all of those bars, the Dow Jones fell out of bed 30% right after that peak. And now I'm seeing the same thing in gold. A couple of days ago, I sent out this email to our members suggesting that they put a sell stop in gold at 1705, which was triggered. And you kind of have the same set of conditions where in gold, you're trading at the top of a very large reverse triangle. And then at the apex of this reverse triangle, you also have this double top price pattern, similar to what you had in the Dow Jones. And, I'm a little bit early. They usually say you should wait to confirm these double tops or bottoms, but I can literally see these things forming in my sleep. And then it's the price action that starts confirming whether this is going to happen or not. And when I sent the email out a couple of days ago, there was 2 inside day bars. Then the market actually continued to go a little bit more sideways. And then we had a collection of like 4 inside day bars. And I'm going to flash for you the real-time chart of gold. The ticker symbol is XAUUSD, and you can see that I was in this market at 1705. Yesterday it closed a little bit against me at 1710, but I still thought the integrity of the chart hold up. I had my stop at 1721. I didn't get ticked out, and today gold has collapsed. So we closed yesterday in gold at 1710, and today was trading at 1685. So collapsed about $25. Overnight. So again, this just validates this strategy of assessing, price action, because if you think about it, it's very difficult, mentally, emotionally, to short, market that's been going straight up, or buy a market that's being, is going straight down, especially when the corroborating information. So if you think about gold right now, gold's going up against a backdrop of, historic economic contraction, historic uncertainty, a historic global pandemic crisis. And it's very hard to be the guy that's, crying out, sell in a pit where everybody's buying. But that's exactly the mentality you have to have as a trader. You cannot look at the information and try and trade on information. The market is ahead of information. The market is counterintuitive, and it doesn't always make sense. We only find out why a market moves in a certain direction maybe 2 months from now, 9 months from now, or a year from now. It's a discounting mechanism. So you have to only focus on price. And it's scary. I was looking at gold and I'm calling a short when it's just been going straight up. It's trading at multi-year highs. And yet I just had this visceral feel that we were going to turn. And that's exactly what we've seen. Whether we'll continue or not, I think so. We formed a massive key reversal today. So I would continue to get short gold. So I hope this has been instructive on how to assess the risk reward of a trade at certain peak or trough areas. And with that said, I wish you a healthy and prosperous trading day, and I'll see you next time.